there, this is James, and you're watching Tixee Live. In fact, you're watching Tixee Live Watch Along, and the Watch Along is of a big event that the whole market is really excited about, and that is the US CPI. But before we get started looking into it and getting all ready for the announcement, which happens in 9 minutes' time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started, because I'm pretty excited about this event. I really am. For that, we're calling today CPI Wednesday, which I like the title of that. And of course, this is the Tixee Live Watch Along, as I've already mentioned, of CPI. Now, obviously, as you know, and those good people who've been kind enough to watch my many episodes I've been doing, we all know I've been talking an awful lot about inflation, awful lot about facing a global inflation crisis. In fact, if we look at the inflation around the world, we have UK at 9.1%, Germany at 7.6, Canada 7.7, EU at 8.6, and US currently, as previous month, 8.6%. But will that change today? Now, expectation for the headline inflation, this is US CPI year on year, is 8.8%. 8.8%. Okay. US core CPI, however, is expectation is 5.8%. Now, don't forget the difference between the normal US CPI, okay, and the core CPI is core CPI, okay, doesn't include oil, prices of oil and fuel and food, because they feel that these are extremely volatile prices, okay, and that the Fed and the central banks can control them. So the headline inflation, i.e. this number, does include oil and food. This number does not. Okay, so if we have a look, and there's actually 4 CPIs coming out. We have year on year, like I said, 8.8, month on month, which includes fuel, 1.1, US core expected at 5.8, and US core month on month expected 0.6%. Now, there's always a big debate, which is the most important. Which CPI number does the market look at? And, you know, sometimes the market looks at core CPI as being more important than year on year, because they feel that is the number that will dictate more about the Fed's decision. Okay, because don't forget, CPI is indicating a massive indicator of inflation. And when we have a high number, usually indicates that the central bank is going to do something, i.e. raise interest rates. So the reason why they put a lot more pressure on core, or they think core is more important than headline, is because, like I said, the central banks don't really have any control over fuel prices, because obviously it's supply, and food prices, of course, again, it's supply, you know, such as we have bad weather conditions, you know, and things like this, like the situation in Ukraine with the corn and the wheat not being able to get out. So they have no control over that. What they do have control over is prices of other goods which people buy, i.e. mobile phones, clothing, cars, things like this. And the reason why they look at the core, or the market things that seem to look at the core, because a lot of these products, like mobile phones, like the latest Samsungs or Apples, a lot of people take out credit to buy these things. Okay, so of course interest rates affect how much people can borrow when it comes to loans and credit cards. So this is why they think core is more important. So if they see like a big rise in core CPI, they think, well, okay, the Fed's going to act more on this because they're going to raise interest rates to encourage people to save money, not to take out credit. So this is how they tend to do it, okay? So this is why there is that debate that core is more important than headline. I think when it comes to governments, they look at headline CPI more importantly than they do, obviously, core, because obviously, they, you know, at the end of the day, it's politically driven. If we're paying more, like I see with Joe Biden at the moment, he's got serious issues with his popularity because of petrol prices. So obviously, that comes under the main headline CPI, not the core. So yeah, politicians and governments look at the headline, but the market quite often looks at core. Now, in my opinion, I think the core is important, especially when it comes to core CPI also focuses on rents. And there is a housing issue building in both the United States, Canada, and the UK, which I mentioned previously. So that's important. But I think the headline CPI is going to get all the headlines, obviously. But of course, the data, the real problem that we have at the moment, the real big issue is the cost of running our cars, petrol prices and food prices, which comes under the headline CPI. So again, I think that's what matters to Joe Public at the moment. Rents, yes, which comes under core as well. It's more effective. It's more influenced with the core. It's more the cost of petrol and food at the moment, which is more important to you and me, for example. So so that's the argument about that. But either way, all four numbers are extremely important. Now, it's a debate whether or not inflation has peaked. Obviously, Germany's CPI came in as the previous number, 8.2%. So the question is, have we seen inflation peak? Don't forget, if 8.6 was a 40-year high for the United States, if it goes higher than 8.6 at 8.8, it's a new 40-year high, not seen since 1981. So the question is, has inflation peaked? I don't think it has. I don't think we've seen the peak of inflation yet, but let's see. Now, what happened last time? Last time I did a live on it was a brilliant video. It was so exciting because it really surprised the market. What happened was the expectation was 8.3%, but the actual result shocked the market, was 8.6%. 8.6%. So it's a big surprise last time out. The knock-on effects to the market, we saw a lot of dollar strength on the back of it. S&P 500, for example, dropped 200 points over the following two trading sessions after that announcement. So the market got scared, and Bitcoin crashed by about 10,000 over that week following that announcement due to risk aversion. So, this is what happened last time. What could potentially happen today? Let's look through some couple of scenarios of what we could be seeing in about 2 minutes. I better do this quick because it's about to happen. I'm too busy talking. Scenario one, as expected, we probably then will potentially see some dollar strength, market fear, and a 75 basis point rate hike baked in, as in the market expecting a 75 basis point at the end of the month by the Fed. Scenario two, lower than expected, potentially weaker US dollar, risk appetite for the market, and 50 basis point rate hike baked in, as in expected. Scenario three, higher than expected, potentially stronger US dollar, pure market fear, and then maybe the market thinking a 75 to 100 basis point rate hike baked in. So those are the three potential scenarios. There could be another scenario four, which the market already expects a high number and it's already priced in. But anyway, let's see which scenario plays out. It's about to happen in 30 seconds. So let's get our charts up, ready, and add it to the stream. Now, I'm going to look at several assets here. Gold, obviously, if my friends out there, yes, I'm going to be looking at gold. Euro dollar, because obviously there's a big chat about it going to parity. We did talk about it maybe going to parity yesterday. Those who follow me, it was very exciting. I had said maybe this could be the event which could trigger it going to parity. Quite potentially. Oh, we've seen spiking up already as it's anticipating it. Okay, so anyway, let's have a look. We have got 9 seconds to go. I'll be also looking at the dollar yen and obviously the cable, S&P, and I'll look at the market in general. So let's have a look. Get ready. Here we go. All right, it should be out any second now. 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 Let's have a look. Let's have a look. Oh, the euro's under pressure already. Euro's under pressure already. What is it? What's the result? What have we got? What have we got? Okay. 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 Oh, crumbs. Oh, okay. I'm so excited. I've just pressed the wrong button. Okay. Oh, God. All right. Okay. I just thought I saw a big number there for inflation. A big number there for inflation, for the headline inflation. Come on. Come on. This is not the time I want my Wi-Fi to play up. Not the time I want my Wi-Fi to play up. Come on. All right. Okay. 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 Right. Consumer Price Index year on year, 9.1%. 9.1%. Consumer Price Index month on month, This is the headline, 1.3%. Core CPI, month on month. There's a lot of attention on it. They're thinking it was going to stay the same at 0.6. It's coming higher at 0.7%. And Consumer Price Index year on year, they expected 5.7%. It's coming at 5.9%. So a lot higher than anticipated. A lot higher than anticipated. Again, another shocker. Another shocker. Straight away, we see the euro under pressure, testing that parity level. Let's have a quick look at gold as well. Gold, straight under pressure, was testing and holding that level of $1,272. It's now trading $1,723. So this is scenario 1, guys. The scenario 3, sorry, a lot higher than expected. So we're seeing stronger dollar and market fear. Cool, blimey, I'm just giving myself a heart attack. S&P, look at it, trading currently at 3,785 points. So yes, this is a big shocker. This is a big shocker. 9.1. That's the same as the UK now. The same as the UK. So yeah. No, sorry, wrong number. I pressed the wrong thing. God, I'm so frustrated. And that's higher than expected. And core higher than expected. So there we go. What a big move on the market here. Let's have a quick look at some other instruments while we're at it. Oil. Okay, slight movement on oil. But really, it's all about the markets. This is scenario 3. Higher than expected. Stronger dollar strength. Fear gripping the market. 75 basic points, maybe even 100 now, expected in the next rate hike. Wow. Okay, let's see where gold is now. Geez. 1,721, not good. Euro dollar trying to test that parity level. Could this be the straw which breaks the camel's back? It really, really could. Wow. Okay. So, wow, I need to catch my breath back after that. So yeah, headline news. CPI year on year, 9.1%. A lot higher than expected. I read these numbers again because these numbers are shocking. 9.1 Consumer Price Index year on year. Month on month was 1.3, higher than expected at 1.1. Core month on month 0.7, and Consumer Price Index year on year core 5.9% versus 5.7% expected. So that is the thing there. Let's bring up the euro again, because it's testing this key level here, 1,000. Come on. Is it going to break parity? Is today going to be the day? I did say today might be the day. It'd be nice if I'm right for a change. So it really is pushing it down. Wow. So those are shocking numbers. I need to have a... I'm so glad this event did not disappoint. I'm really glad this event really did not disappoint. Because the last, every time, knowing my luck, every time when I say this is going to be a potential big event, guess what? It disappoints. So yeah. So anyway, that's we need to have a look at that. Okie doke. I need to catch my breath back after that. Don't forget, you can ask me questions while I'm live on air, and I need to save my voice actually. After all that, Euro still testing for parity. Is it going to do it? Are we going to break through it? Exciting. So you can ask me questions anytime I'm on air. Don't forget, I'm going to be back on air again we do a complete review of this and everything else in a minute. I'll be back on air in about an hour's time. Okay, an hour's time to do a complete review of this, to have a look how we are, and maybe by then Euro has broken below parity. It's currently trading. It's really trying to break it now. Let's have, where's the S&P? S&P 500. Wow. Currently trading 3,761 points. 3,061 points. Dollar yen back up to 137. Cable back down to 1.1846. So there we go. So yeah, okay. So yeah, there we have it. What a massive shocker. What a shocker. Okay, so don't forget, I'm back online again in about an hour's time at 1:30, maybe 1:35 p.m. This is when the US session opens as well, to see how the US market reacts to this information. So I'll be back on air in 1:35 p.m. UTC. Do we have? Yes, we do. Yes, we do. Yes, we do. Yes, we do. I just said it. Year on year, 9.1%, which is a shocker. Month by month, 1.3% versus 1.1%, shocker. Core, 0.7% month on month, and 5.9% higher than expected year on year versus 5.7%. So yes, a shocker. Okay, yeah, I will definitely be back online again in an hour's time. Thank you for the interaction, by the way. In an hour's time to discuss this more and some other stories as well. So anyway, remember, if you're watching me on Facebook and you like this little episode, by all means, give us a follow. If you're watching me on YouTube and you like this episode, by all means, subscribe if you like, hit the notification button. So next time you know I'm going live. And if you enjoy this episode and put up with me yelling like a crazy person about the result, give me one of those. I've got 2 already. It's nice to see that people are liking what I do. But anyway, don't forget, back online again in 1 hour's time. Please join me for that, because we can dissect this information more, have a look where the market is, potentially have a look at some levels as well, and get some other stories as well. So don't forget, 1:30 p.m. UTC. Anyway, till then, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till an hour's time then, every single one of you, trade safe.